Will the Fed raise rates 25 basis points in June 2026? IBKR prediction markets let you trade the outcome alongside your stocks and options. Earn interest, get it right, and earn $1 per contract at ibkr.com/predictions. Last trading day, June 17th.
Welcome to Chit Chat Stocks. On this show, hosts Ryan Henderson and Brett Schaefer analyze businesses and riff on the world of investing. As a quick reminder, Chit Chat Stocks is a CCM Media Group podcast. Anything discussed on Chit Chat Stocks by Ryan, Brett, or any other podcast guest is not formal advice or recommendation. Now please enjoy this episode.
Welcome into Chit Chat Stocks, a podcast to help you find your next great investment. Today we bring back on recurring guest Travis Hoium of Asymmetric Investing and Motley Fool fame to discuss the fast-growing peptide market, which, for anyone that doesn't know, that would be something like the weight loss drugs and other investing opportunities in this space, including, yes, we're going to be discussing HIMS and HERS stock, a stock that has been, it's a popular one. It's gone on quite the roller coaster ride over the last few years. It was once an investing favorite. Now they've run into some news, potential noise, some potential troubles, but also has a huge opportunity ahead of it. And Travis is going to lay out everything for us. But first, Travis, tell the listeners, you just wrote an article that kind of inspired me to reach out about this episode, talking about the 1000x opportunity in peptides, but I think for 99% of listeners, they don't even know what they are. So what are these drugs? Are they dangerous? Tell the listeners about them.
Yeah, we should start with it. None of the three of us are doctors. None of this is medical advice. We're looking at this through an investing lens. And, that's what I'm doing with asymmetric investing, right? Is trying to find these 10x, 100x, potentially 1000x stocks, because that's how you ultimately beat the market. It's not, finding a company that's going to undervalue by 20%. It's the massive home runs and having those in your portfolio. So that's the sort of framing that I come to the peptide market, which I think is, we don't really know how big this market is really. And that's really the interesting place that we are right now. You said it's a high growth market. It's a high growth market for a few products. GLP-1s are peptides. I don't know if you knew this, but insulin is a peptide. So simply put, peptides are just between 2 and 50 amino acids. It's a little bit smaller than a protein. Your body has thousands of naturally occurring peptides, and they're just going around your body, telling your body what to do. Hey, your knee is injured. We need to fix this. It's peptides that are kind of communicating with your body. So these have been around for a long time. A lot of the peptides that we may potentially discuss that RFK has discussed, moving from what's called category 2 to category 1 so they can actually be compounded, have been around for a long time. It's just a question of what is the use case? Who are they going to be prescribed to? What does that infrastructure look like? But it's a growing area of interest because it has been so successful. There's relatively low downside or side effects. And the interesting thing for me is some of these peptides that could come to the market in the next few months could potentially be very, very low cost. And so the impact is very different than something like a GLP-1 coming out and being thousands of dollars a month. What if we go to a different world where things are more personalized, where we're taking multiple peptides a day? I don't know if that's where we're going, but that's what that potential is for this industry.
Okay, let's say you're not talking to the hyper-focused tech bro from San Francisco. You're talking with your aunt from Wisconsin, and she's saying, "Hey,
I'm from
Minnesota.
I'm from Minnesota. We don't talk to people from Wisconsin here.
My family's from Wisconsin. That's why I came up. But then I realized a little rivalry there. Okay, your aunt from Minnesota, and she says, "Well, Travis, these are new drugs. People have only been taking them for a little bit of time. I'm scared of the long-term side effects. I don't want to take something that, like with other drugs in the past, or sometimes maybe the actual, the only ones that people remember are the ones that had these long-term side effects. But okay, like, why is it not going to kill me 20 years from now? Why should I feel safe taking one of these? And I feel like that's the question to ask, of whether these are going to become mainstream?
So there's a lot of things that I'm not going to necessarily have all the answers to all of these things. But the place that we are today, as I understand things with what could potentially be moved to category 1, is the first thing is there real harm that's going to happen? Or is the harm potentially that Brett takes a placebo, and is injecting a placebo, and it's not actually doing anything? That's not harming you. You're maybe spending money you shouldn't be spending. But if there is the potential for a benefit, maybe that's something that we should be exploring as consumers, as the medical community. So I think from a harm side, you open up a huge can of worms, and this could be its own podcast. But I think certain segments of the population tend to over-index on, well, the FDA says this is good, this is approved, therefore it is good and I don't have to ask any more questions. Or the FDA has not approved this thing, therefore it is bad. And both of those things are probably incorrect, right? Like opiates are approved by the FDA. There is a huge opioid epidemic, and a lot of those are prescription pills, right? Prince died not far from here taking prescribed medicine that was approved by the FDA. So I think we kind of conflate those two things. This peptides fall a little bit more into, the vitamin category to me, where it's like maybe you're taking, maybe there's some medicinal benefit, but as long as there's no harm, we should be at the point where we're learning more about this. What are the benefits? How should they be prescribed? What does that infrastructure look like? Right now, you would have to get the prescription from a doctor. If they are moved to category 1, you'd have to go through a compounding pharmacy. So there is infrastructure there. This isn't just going to GNC and getting your peptides. But I think, and then you have to think about the incentive structure for the pharmaceutical companies too. And anybody listening to this or listening to conversations about peptides, think about what the incentives are of anybody that you're listening to, because when the big pharma companies go, you know what, we can't do this, it's unsafe, they want to protect their business, right? When you talk about something like Ozempic was, the first kind of blockbuster GLP-1, for that GLP-1s are a peptide. But the reason that they make so much money on it is they figured out a way to modify semaglutide so that they could patent it. And once you patent it, then you have something that's protected for a period of years, 20 to 25 years. And then you go through the FDA approval process, and then the money machine starts. If we're moving to a world where these peptides, these 14 peptides are going to be approved by the FDA or moved to category 1, there's frankly probably not a lot of money to be made compared to what the big pharma companies are making. So they're seeing it, I think they see it almost as a threat, because if this is really effective and it costs me, $100 a month for a stack of peptides, I know some people don't like the word peptide stack, but a number of different peptides that have different impacts on your health, and it's relatively inexpensive. It's $100, $200, maybe $1,000 a month. But it's not this massive, massive high margin moneymaker that, Ozempic, retatrutide could potentially be. Then the incentives are completely different. And that's something that I think is just kind of a tension in the industry right now, because everybody has different incentives when we talk about something like peptides.
Okay, I've got a couple questions for you, and I want to pull something up real quick. Little plug for Fiscal AI here. I am looking at Novo Nordisk 2 GLP-1 drugs, which I think it's just 2 that they have, which is Wegovy and Ozempic.
Yep.
And then I'm adding on Eli Lilly's Zepbound and Mounjaro. So for anyone that's wondering, why are people talking about peptides? Why is this such a big discussion? Of those 4 drugs combined, they generated $20 billion in revenue last quarter. I believe, from everything I've seen, it is the fastest growing drug in pharmaceutical history. So this is like a massive boom, and it has massive implications. I remember I was looking at a a beer company recently, and it's like it's impacting a whole bunch of other consumer brands
Yeah,
potentially.
restaurants.
The whole restaurant space is getting decimated.
Yep.
And I actually saw, I think someone gave out for people that are like, well, why are you talking about this right now? The revenue, I think last quarter, and it might be eclipsed this year, it might be different from these two categories, these two companies with these drug classifications are bigger than OpenAI and Anthropic combined. So it's a huge, just fast growing market, almost as fast as growing as AI.
So I guess my question is, I guess two parts. What are the different businesses that you are looking at in the space and actually like considering positions in or have positions in? And then the follow on here is, what advantages, because it sounds like this is like a massive peptide boom. It seems like it's kind of a open race in terms of like get a peptide out there. It seems like regulation's kind of slow to respond potentially. And maybe there's some unregulated peptides being sold as well. What advantages do the big pharmaceutical companies have? Like, why is it just distribution, research and development? Are there like big economies of scale for like Eli Lilly and Novo Nordisk?
So there are advantages that those companies are going to have in kind of creating custom peptides. So again, they're not going to be looking at making a BPC 157, which I think is relatively trivial to make because there's just going to be no money there. But if you look at something like retatrutide, it may be something that you've heard about. They're calling that a GLP-3. So the advantage there is versus something like an Ozempic, the weight loss is actually, I believe, higher in their current clinical trials. This is not quite FDA approved yet, but they're moving through that process. Probably this year or next year, it'll actually be approved by the FDA and actually hit the market. But this is one of those products that, the secret is it's been used in Hollywood and the weightlifting community for a long time. And that's where they've figured out a way to patent this, to own retatrutide, and then they can turn a business into it. So, Eli Lilly would be one of those companies that I at least keep an eye on. I think they've got a lot of interesting stuff going on. With asymmetric investing, I don't typically invest in the company that could potentially be disrupted. And if you look at Eli Lilly, trading for 40 times earnings, 13 times sales, retatrutide could indeed be $1 trillion drug. And it would make Eli Lilly a bigger company, but I don't know that it's necessarily kind of, up my alley. So that's an area I kind of follow. Where I'm seeing more opportunities is in completely changing the way that we think about healthcare. So if you mentioned a company like HIMS and HERS, if we get to a point where these relatively low-cost peptides are able to be compounded, whether that means that you're going to be taking it in a pill form, whether it means that it's going to be an injectable, then you get to this world where, okay, what does that look like? What does taking one peptide or a peptide stack look like for the average consumer? And to me, it looks a lot like what HIMS and HERS is building, where instead of being a one-to-one relationship with a doctor who may or may not be up on the latest in peptide information and data, they may be, this may be kind of slow. To be clear, it is doctors who are prescribing peptides even today that are seeing a lot of these benefits. So if you're, in Hollywood, for example, this is where a lot of this leading research is done, is the people who can afford to have this bespoke treatment. Well, how do you get that to scale? And it's more of a model to me like HIMS and HERS, where I can plug into this digital network and have real-time feedback. So we're not there yet. Again, we're looking at asymmetric investments, but who is going to be able to take the information that I'm gathering every single day? I'm wearing a Garmin watch. I have a Garmin scale. So you got information about how I'm sleeping, what my heart rate is, what's happening with my weight on a day-to-day, minute-to-minute basis. If I take that information to the doctor, and I've done this with my kids, right? We had an outlet, hey, if I share their heart rate information, what would you do with it? And they're like, they just don't have a way to take that in and process that information. But a company like HIMS and HERS could go, okay, we're going to start you on the Wolverine stack. I'm not even sure exactly what's in the Wolverine stack, but that's one of the kind of well-known ones. Is this going to work for you? Well, you've got my labs. We could potentially add some genomic information into that to say, are these things likely to work for your body based on your genes? That's something that's probably an area, more information needs to come into a system, whether it's a doctor, whether it's a platform like HIMS and HERS. And then that treatment is probably going to need to be modified or personalized on an ongoing basis. So, you would say, hey, this is working really well for me, but like, I didn't sleep. I have not slept well in 3 nights. Okay, we're going to change this because that is a potential side effect of, one of these peptides. I'm just using these kind of as examples, but I think there's going to be much more kind of day-to-day adjustments with something like peptides. If this goes to mass use, that we're just not necessarily used to, that the typical pharmaceutical and doctor-patient insurance, CVS industry is really used to and built around. And again, that's where you get disruption. Let's play the what if game. This is what my 1000X article was about, is what if this is the huge deal that some people think it is, and the existing infrastructure is just not set up to optimize it. And the incentives are completely different than they used to be because these things are relatively cheap. So, the doctor's not making a ton of money. The insurance company isn't making a ton of money. But who could serve these products at a relatively low cost and make the economics work? A company like HIMS and HERS, Roe would be another example. They're private. But that's where I'm seeing potential opportunities for disruption with the help of things like peptides. We're not there yet, but that's sort of the thing that I'm looking at on the horizon.
Here's a quick follow-up. Should HIMS and HERS buy one of the health tracking device companies?
So we know that they are building they have hired for health device positions. It's actually not far from me here in Minnesota. We have a big medical device community in the Minneapolis area. So I don't know what their plan is there. We know they have plans in AI. They even had some blog release last week talking about hey, we got some AI stuff coming. So that could be really interesting because that's where you get to this place where I think we are entering a place with the medical community where there's so much information that you could potentially be putting off about your health, that where does that go and what does anybody do with it? Can AI sort of be helpful in that, in saying, hey, look, Travis, you've been sleeping really poorly and you've gained 5 pounds. Here's some things you could do, not necessarily, taking anything, but like eat a little chicken tomorrow. Here's some meal plans. So I think, and then an AI can be updated with the latest medical information in an instant, right? That takes a long time to diffuse to the medical community, even if something is effective. And by the way, I should just point out too that you start diving into the backstory in some of these things. Like Ozempic has never been approved for weight loss, FDA approved for weight loss. It is prescribed for weight loss, what's called off-label. Wegovy is the same drug, but that went through trials at different dosages than Ozempic did. So you get into these really weird dynamics with the existing infrastructure. And again, what does the future look like? What does disruption look like from that infrastructure? That's where I don't have all the answers, but the companies that are looking at this as like, how can we do things completely differently and have better outcomes? That's where I think the opportunity ultimately will be.
Will the Fed raise rates 25 basis points in June 2026? At IBKR prediction markets, the yes recently traded at 5 cents, while the no traded at 90 cents, but the markets can change quickly. Trade prediction markets on political, climate, and economic events with simple yes or no prediction style contracts where prices reflect probability. Explore trending data, spot the trends, and if you get your prediction right, you earn $1 per contract at settlement. Plus, you'll earn a 3.14% APY on your investment with an interest-like incentive coupon, and you'll get $3 for signing up with IBKR prediction markets, which you can use for any purpose or to start trading. Prediction contracts are not suitable for all investors. Go to ibkr.com/predictions and turn your views into IBKR prediction contracts today. Last trading day for this contract is June 17th.
Yeah, I mean, I feel like you can envision if things go correctly, there's the health tracking layer, there's the AI layer, and then there's the personalized medication layer that could all come together and just be a huge, not only economic opportunity, but people get treated much, much better for much, much cheaper.
Well,
I
and
want, or,
just
go
to
ahead.
tack on, your question about the wearables piece of it, that may be vertically integrated. It may also be the case where, Garmin would be an example, Apple Watch would be an example. I wouldn't be shocked if some of these companies end up looking more like platforms, right? Where you have this information that's coming in from different sources. Because I don't necessarily think, like, if I'm a Hims and Hers subscriber and I'm using their GLP-1s or the peptides, then I have to wear a Hims and Hers device. I don't think that probably makes a lot of sense. Maybe they make one, a little bit like Google, right? Like, we're going to make we're going to buy Fitbit, we're going to have Android, but most of the devices are going to be made by Samsung. So I think that probably makes more sense, because they're not a device company, but they probably want to get to that point where we got to learn about this. We got to figure out what we can and can't do. Whoop would be another company, right, that could be tracking some of that information. Maybe that information then plugs into. So the business model is a little bit uncertain, but I think you're right, Brett, that the tracking, the information piece is potentially another big valuable piece.
Okay, before we specifically talk Hims and Hers as a stock, the last question I had, maybe Ryan has some others as well, on the actual industry overall, is around the government, because they could open up the floodgates. They could also put up huge amounts of roadblocks. And we have, people may have heard, a interesting person in charge of the Food and Drug Administration at the moment.
To say the least, good or
Yeah.
bad, depending on how you're thinking about it.
Trying to keep things apolitical, but what do you think this could impact the industry? What have they said? You mentioned briefly the taking, about the 19 peptides thing. Again, I don't know much about it. Explain that. How do you think the government could either help or hurt this sort of trajectory for the peptide industry?
So there were 19 peptides. I'm going to get my numbers directionally correct, but I think they're right. 19 peptides in 2023, so under the Biden administration, that were moved to Category 2, which means you can no longer compound them. So there's this entire classification of companies. You may have heard of compounding in relation to Hims and Hers and making GLP-1 semaglutide in particular. So compounding is not some sort of magical weird thing. When my infant son was sick, he had to get a compounded treatment, because you can't just go off the shelf and get something. You got to make it kind of specific. So there's actually a specific law that was passed in the mid 2010s to create this. There's 503A and 503B facilities, and there's a reason for them. I don't know that reason for creating those compounding facilities necessarily translates to the way the world works in 2026, because I don't think they were envisioning these companies sending products out at scale. But that's kind of where we are, is that a lot of these things have been compounded, and peptides would fall under that category. But if you're Category 2, you can't compound them, even if they're can't typically compound them, even if they're prescribed by a doctor. If they move to Category 1, then what RFK has talked about is moving 14 of these 19 peptides back to Category 1, where then a doctor could say, okay, Brett, we are going to prescribe you BPC 157. Here's the treatment plan. Here's how much you're going to take, when you're going to take it, all that kind of stuff. So it would just be another treatment that could then fall under that compounding category. What that then looks like, do we create, pill forms with liposomal technology? I don't know exactly what it looks like, but right now the sort of foreseeable future would be a bunch of injectables would be available via compounding facilities, like Hims and Hers bought a couple of compounding facilities. So they have both a 503A and a 503B, but there's a bunch of these facilities all over the country. So all of the Rose, all these companies have relationships with a 503A or B facility for doing something like peptides. So the other argument that I don't love, but the argument that a lot of people in the industry make for moving these to a category 1 is people are using them anyways, and they're getting them through illegal means via typically through Chinese suppliers on the gray market or the black market, and you don't actually know what you're taking. I don't love that as a reason for legalizing something, right? Like that feels a little. I would much rather make a argument that is, hey, this is worth. It's not going to harm people. Let's make sure it doesn't harm people, but let's also start gathering information on how beneficial is it. We do this all the time. If stuff gets FDA approved, we find out it doesn't do the thing that we thought it was going to do, and then it gets pulled from the market. Or do we find out that it's amazing and we're all on some sort of peptide stack in 10 years? I don't know where it goes, but that's sort of where we are from an FDA standpoint, is they've started to crack down on the compounding of GLP-1s. And I think that's in anticipation of peptides are coming, and the way that will get to market is through these compounding facilities.
Okay, before we talk more specifically about HIMS and HERS, I want to ask, what industries do you think will be the most impacted? I'm going back to I think Buffett had this analogy when cars were coming along. Like you would have seen that there's going to be like cross-country roads. There's going to be a million cars or millions of cars on the road, and you'd think to bet on the cars, but the right thing to do would have been short the horse industry or whatever.
Yeah.
What industries do you think are the horses in this case?
I would be very worried about owning any of the existing infrastructure in healthcare. So that goes from insurance companies to the hospitals. And the reason is I think the incentive structure that's in place today is so backwards, right? Like if you think about, I don't know if you guys were following things back when like Obamacare passed, but the idea with Obamacare is get everybody insurance. What ended up happening is if you look at the incentive structure with that law, and with what ended up happening is if you're United Health and you have $1 million worth of revenue, you can only make $20 million. You can only make 20% in profit, operating profit. I think is the but there's a limit on how much profit you can make. So
yeah,
how do
that's
you
correct? Yeah, that's
so how do you increase your profit? You have to increase your revenue. Well, we're not adding, there's only a certain pool of people. So the industry as a whole only has a certain pool of people. So to compete on cost would just be to cannibalize other companies. So the incentive for the entire industry is just to continue raising prices. How do you raise prices? Well, you don't do this directly, but indirectly. Hey, doctor, if this treatment happens to go up in cost, I'm fine with that, because now my costs go up, now my revenue can go up, and my profits can go up. Oh, these pharmaceuticals, we're going to cover more of these pharmaceuticals because now we're going to be spending more money, which then is going to mean we're going to raise our prices next year, and we're going to make more profit next year. Like the entire industry, from doctor all the way through to insurance company, is to increase costs. There's nobody in that existing infrastructure whose incentive is to lower costs. And you can look at something that's more unregulated. It's not completely unregulated, but like LASIK, right? That doesn't go through insurance typically. You pay cash for it. The cost of that has dropped like a rock over the past 20 years, and the quality has gone up. So if we move to a world where the thing that I think is fascinating about HIMS and HERS specifically, you can go back through their conference calls, and they typically get a question every quarter or two about, hey, when are you going to start taking insurance? And Andrew Dudum has said, we don't want to take insurance because you can't disrupt the status quo if you're living within the status quo. And so that entire infrastructure, I think, is very highly valued today. We talked about Eli Lilly trading for 13 times sales because investors think that it's all very safe. And that may be true for a while, but you could go back to 20 years ago. You could look at Coca-Cola, Budweiser, Kraft. These brands are going to be around for a very long time, right? And they're still around, but their profits and their revenue have not grown over the past 20 years, and their stocks have done horribly because the entire industry changed. It went from, do I have shelf space in the grocery store, to you know what? We got a lot of, if you want to build a mustard brand, you can just take out Instagram ads, or you can, so the whole supply demand dynamic changed. I think that's going to come for the health industry, where now I don't have to go to a doctor, a physical doctor, to get answers to my questions. I can go to a HIMS and HERS. I can go to ChatGPT has a medical, tab or whatever now. I think that technology piece that has come for every single industry over the past 30 years is going to come for medicine. And the incentives for a telehealth company are completely different than the incentives for doctors, pharmacies, and insurance companies. And that's how disruption works, is you come in with a completely different incentive structure that the existing companies can't respond to. And so when you see companies, the battle between Novo Nordisk and HIMS and HERS was fascinating, because Novo has no answer. Like there is no answer other than regulatory capture. And that is how you know you're being disrupted, is because you go, wait a second, this isn't fair. No, these guys are bad. And you say all kinds of mean things because you're not winning on the merits.
This makes me want to have another conversation about Oscar Health stock, which I think you maybe have some interesting thoughts on, although, I don't know if you follow it that well, but
I follow it a little bit, but again, they are coming at it things from a different angle, and I'm intrigued. I don't own them yet.
Hey, if this thing happens and the entire industry paradigm of the last 15 years or so gets disrupted, they could be to benefit. Yeah, I'd say that could be up your alley as well. But we don't have time today. We're talking HIMS and HERS. You mentioned the Saga of the last year. It's been what it seems like for someone that follows him loosely is once a week I open up the Twitter timeline and HIMS and HERS is either going to the moon or the company's going bankrupt tomorrow, and the company's taking a lot of risk. You've seen the management say things publicly. There's rumors that get tossed out there about their tactics. Why are they doing certain things? Let's start out with what exactly happened. I see the stock down maybe 80% from highs. I mean, there was a period where they kind of just went crazy with that stock price. But what happened? Why are we trading at $20 today?
Yeah, the current drawdown is 72%, but it did hit almost 80%. Okay, a lot of pieces going on here. I'm going to try to get my years right. 2024, there was a shortage of GLP-1s. So the FDA has this rule where, okay, if there's a shortage of these branded products, then you can compound them. So we talked about those compounding facilities that HIMS and HERS owns. That was a huge boon for HIMS and HERS. So you come in, I think that announcement came late in Q2 2024. They had a ton of growth in Q3, Q4, end of Q1 2025. The shortage ends. So that means that companies like HIMS and HERS and all of the telehealth companies, Ro, Medv, the company that got a bunch of attention from a New York Times piece, were selling compounded GLP-1s, either through facilities they owned or facilities that they were contracting with. Then you get to the end of Q1, and there are still exemptions for selling compounded GLP-1s. So the personalization exemption. So let's say that you're taking a GLP-1, you're taking Ozempic or Wegovy, and you're on the lowest dosage, but it makes you sick. Then your doctor, and again, typically these compounding, the law was created so that your doctor could say, okay, Brett, here's what you're taking today. I can give you a lower dose, but we have to get a compounded treatment because there's no branded, pen or pill that's available. So we have to get this, kind of personalized dose. That is the exemption that they used, but they kind of use it at scale, right? And if you're a HIMS and HERS, if you're a Ro, you can kind of massage your questions, you can massage your dosages to say, you know what, everybody needs a personalized dose of GLP-1s. And so were they operating illegally? No. Were they operating in a very gray area? Yeah, probably. And until the FDA, cracks down and says, hey, no more of doing this, these companies were basically pushing as far as they could, not just HIMS and HERS, but all the other companies as well. What happened earlier this year was Novo Nordisk sued HIMS and HERS. This did not have to do with their compounding, their marketing tactics. It was a patent lawsuit. That's really important. So I had a huge piece that I put out on Asymmetric Investing about this. I drug my patent attorney friends into the weeds over a weekend, so to get as much information I could. But what happens with a patent case like this is Novo Nordisk says, "Hey, Hims and Hers, we don't actually own semaglutide, but we own the modified version of semaglutide that we're putting in our branded products. And we think that you are violating that patent with your compounded treatment that you're selling." So we didn't actually get any answers about that, like, because we never got to discovery, we never got to arguments. But this was a patent case, not an FDA case. So I just want to make that really clear for people. The implication there is, and this was always the implication, this is when the stock dropped like a rock, and everybody accused Hims and Hers management of being shady and blah blah blah. But if you look at that case and what the incentives are in those cases, there was never an incentive for this to be something that decimated Hims and Hers. Because if Novo Nordisk was going to win that case, it was probably not going to win until 2030 or 2031. That's just how long these patent cases take. And if they won, they would probably get a license award. So maybe they win $100 million, and in the meantime, Hims and Hers does $1 billion worth of sales. But they don't take that $1 billion worth of sales and say, hey, you know what, this actually belongs to Novo Nordisk. They just say, what sort of license fee would you have had to pay if you were to be licensing this technology for this patent from Novo Nordisk? 2031 is important because that's when Novo Nordisk's patent expires for the semaglutide in the US. Already expired in Canada. So you add all of these incentives together, and it's a really, really big headline. But at the end of the day, it was always likely that they were going to come together and go, hey, Hims and Hers, we'll stop compounding, or we'll do less compounding, but we want to sell your branded treatments, and we want to sell it at a low cost, right? Here's the disruptive piece is coming into this in 2024, when all this started, Ozempic was like $2,000 a month. On Hims and Hers today, you can get Ozempic for, I think it's $150 a month. So you look at all these ups and downs and all the battles, you now have a world where branded GLP-1s are a tenth of the cost of what they were 3 years ago, and now they're also available on Hims and Hers. So it's a lot of finagling, a lot of battling, a lot of press releases going back and forth. But it ultimately has turned Hims and Hers into much more of a platform business, and I think turning a little bit away from their compounding, vertically integrated compounding, and trying to be in this gray area. And I have a feeling that they know that peptides are coming, and that's going to kind of fill the gap and create another layer of opportunity. So they're happy to work with these companies that are creating branded GLP-1s, both injectables and then also the oral products that have come out this year.
Yeah, it's been kind of funny watching Hims and Hers from the sidelines, because it's a battleground stock. There are very vocal bears, very vocal bulls. And it seems like a lot of the headlines seem to confirm both sides somehow. They both cheer whenever a new headline comes out. But yeah, this one in particular was funny because all I saw was headline, Novo Nordisk suing Hims and Hers.
Yep.
4 months later, Novo Nordisk and Hims and Hers are partners. It's like, anyway, but okay. On Hims and Hers specifically, what percentage, I don't know if they break this out, but how much of the business is related to GLP-1s or peptides, weight loss drugs in particular?
Oh, goodness. Now you're going to, it's only about a quarter. I forget what their guidance is for 2026. And they don't guide for GLP-1 specifically. They guide for weight loss. So GLP-1s is probably going to be a huge portion of that weight loss, but they will talk about, they have weight loss pills, generics and things like that. So it is a big business, and it has been a big driver of their growth in the past. I think that's, probably the the most salient argument against them is like, how much would they have actually grown had they not been bringing GLP-1s to market? And they probably would have grown, but definitely not at the, I think it was 100% rate for a while there as GLP-1s were booming. Because the other thing that GLP-1s have done as the HIMS and HERS business model has evolved, if they've gone from selling things like ED pills, which you're talking about, I don't know, $20, $30, $50 a month, to GLP-1s where now you're talking about a couple of $100 a month. So they had growth in their the members, as they call them, the people who are actually buying stuff from them, and they had growth in the order volume on a monthly basis. So it was kind of a double whammy there. It's a important piece of the business, but this is not a GLP-1 company. So again, it's always kind of confusing because it gets all the headlines, but then you actually listen to a conference call or watch the numbers, and it's not as big as you might think.
Yeah, to kind of back up the point you're making with some data, fourth quarter of 2023, so 2 years ago, average revenue per subscriber was $55 monthly. 2 years forward, we're looking at $82 monthly. So you've seen a 60% jump across their whole subscriber base, which is massive, especially considering they also continue to add more and more subscribers as well. But I'll stop the share there. We've done plenty of fiscal plugs. Any questions from you, Brett?
Yeah, well, and I will add, since they are our advertiser, fiscal.ai/chitchat. The link is in the show notes. Get 15% off any paid plan. I think we had some listener questions around this as well. I think I can combine everything into really one question here. There's people asking about management, which I think for myself, I get nervous about. Maybe crazy is the wrong term, but aggressive management teams that, Uber style, aren't afraid to push the boundaries. There's also a listener that wanted to talk about, hey, there's a gigantic range of possible outcomes with HIMS and HERS stocks. How do you try to weigh the different odds here? And I just want to ask, what do you think the opportunity is? Your thoughts on management, kind of just what does the future potentially hold as someone who follows the stock closely?
I'll start with the management piece because I think this is something that probably gets a lot of attention from people. Andrew Dudum, I think, makes a lot of people uncomfortable. I love what he's doing. I think if you study disruption and how disruption works, how companies need to operate differently from the status quo. This is why we talked about the FDA stuff, right? HIMS and HERS is trying to do things differently, not do the same thing that every other company is doing, because that's not how you win in this market. If they're not doing something differently, then it's not an asymmetric company. So you look at, is he pushing in certain areas that maybe you or I would be uncomfortable with? Maybe. But also, and this was a big part of when that lawsuit came down, I did a big piece on, look who's on their board of directors. And it's like the former FDA head of compliance, a former executive at Novo Nordisk. These people know what's going on and what the buttons they can push are in the industry. So I think every founder who is successful long-term and has 10x, 100x outcomes is going to make people uncomfortable at some point. I think that's where we got to with Dudum. This was maybe a button that some people wouldn't have pushed, but they did push it. And guess what? It ended up working out pretty well for them. And by the way, the thing that pushed them over to the edge was they introduced this compounded pill version of Ozempic or Wegovy, and that was where everybody got upset. The FDA got upset. Novo Nordisk got upset. So, is that a miscalculation, or was it a calculated bet? Hey, we think this is a button that we can push to, they know that the only thing that Novo Nordisk can do is sue them on patent grounds. And like we talked about earlier, that's going to be a tough battle for them. It's very possible that their patent would have been invalidated as well. I don't necessarily think that's likely, but it's a risk. If you're talking about a $30 billion business, Do you want to risk that for a company that's doing two point something billion dollars worth of revenue? That's probably not a good bet when you only have 5 years left of this patent in the first place. So think about, if you're interested in HIMS and Hers and Andrew Dudum, listen to the way that he talks about the business on conference calls and the way that he talks differently from the existing infrastructure. We're only going to take cash. We're not going to deal with insurance because we want to democratize this medicine that is only available to wealthy people today. Historically, that is a phenomenal place to be for a business, right? Black cars, getting a ride in a black car. That's something rich people could have done 20 years ago. Suddenly Uber comes around and I'm taking black cars with my friends to go out on Saturday night and, tracking it and finding out exactly. Like, this is what so many disruptive businesses are built on, is what's the top 0.1% doing, and then how do we bring that to the masses? And the other thing from an opportunity standpoint, with HIMS and Hers, I think you have to look at both opportunity and risk. And this is what asymmetric investing is all about, right? Like limited downside and unlimited upside. That's when you hold a stock, the only money that you can ever lose is the amount that you invest. You invest $1,000 in HIMS and Hers, you can't lose 10 grand. So the stock is trading for 2 times sales as we're recording today, 30 times earnings. Yes, they are a profitable company today. They have gotten to that point where they're getting operating leverage. Their 5-year compound annual growth rate is 74%. So even just looking at those multiples and you go, it seems like that should be a much more valuable company than that. You have like Palantir trading for what, like 100 times sales, and their growth rate is lower than that. Then you look at, okay, so it's a $4.4 billion market cap. You're talking about pharmaceuticals alone are over a $400 billion business just in the US. Okay. They also added, Zava and eucalyptus in the last year to get more international growth. So the potential there is a massive market. That's on top of all of the other pieces of the healthcare industry that they could potentially be impacting. And we don't know exactly where this company is going to go in the future, but this has all the hallmarks of an asymmetric opportunity. And the worst thing that could happen is that it could go to zero. And that's absolutely possible. That's possible with any stock that I invest in or that any of us invest in. But this fits everything that I want to see with a company that is disruptive. It's a massive market. It's founder-led. He's pushing the envelope. And there's a ton of optionality in the business. So 10 years from now, do we look at this as a company that's suddenly got 50 million subscribers and it's kind of like the Netflix of healthcare, where it can just kind of, you open it up and you go, maybe you guys, we have the kids app. I got to put my proposal out there, but you got HIMS, Hers. And I think, you get to a point where you have a kids app, you open it up and you go, hey, it's midnight on a Friday. My kid is sick. HIMS and Hers here, here's a picture of their eardrum. Here's their temperature, blah, blah, blah. And then boom, that stuff's delivered to your door an hour later. That's the kind of thing that's disruptive. What does the peptide stack look like in the future, if that is a thing? This is the kind of company that can bring that to market. So I just think they're sitting in a really good position as a potential aggregator, to use another, investing strategy word that I really like to use. If they get to that point where, 2.5 million subscribers today, maybe 4 to 5 million with their recent acquisitions, you start 10xing that. Now it's a very different conversation with those suppliers. Now who has the power? You become the Netflix, where you go, you know what? We're fine if we don't have Ozempic anymore, because we've got these other treatments that we can have. So we don't have all the answers today, but that's the point of asymmetric investing is 10 years from now, 20 years from now, is this going to be the kind of company that could continue to grow like this? I think it could be. And that's where I'm seeing a ton of opportunity as everybody else gets bearish.
Okay. I think this is our last question, unless Brett has some more as well. What do you think investors miss about HIMS and Hers stock?
I think it is natural for most people to reject the companies that are doing the most disruptive things, right? So if you're pushing against the FDA, you're pushing against big pharma, you're pushing against, the way that doctors work, right? It is comfortable to say, hey, I have this one-to-one relationship with my doctor. They know all the answers, and that's who I trust. I'm not going to trust this unknown person from a telehealth app. So you could have said all those things about Uber when they launched, right? Why would you get into a black car, much less a random person's car, and take a ride? This is always what happens. Is the bleeding edge of disruption is very uncomfortable, and even if this is not the right stock for you, it very, very well may not be. I think it is a very good one to watch to see how disruption works and how industries respond. Because when I see companies like Novo Nordisk or Eli Lilly getting really upset with the HIMS and HERSs of the world, that's how you know that they've really got something. And we'll see where it goes. It's like I said, there's no guarantees, but I think watch this disruptive picture, because that's what I've been studying. That's what I write about constantly. These are the hallmarks of disruption, and they've got everything there. So worth keeping an eye on, if nothing else.
Okay, I'll let you finish things out here with a little pitch for asymmetric stocks, as well as maybe my final question. Any other stocks that you're looking at in the industry? I know you've looked at Outlet, slightly different, it's healthcare related. Any other stocks kind of in the healthcare disruption space that pique your interest?
I mean, Outlet is the one that I think it's a very, very small company, to be clear. So a very different kind of risk reward profile. I am watching Eli Lilly just from an operational standpoint, but most of the companies that would be in that disruptive space, the Rows of the world, are still private. Even some of the trackable companies. I guess the one company that is in the asymmetric portfolio that's kind of adjacent is Garmin. So that would be the play on the human data feed, is I think what I called them. So I imagine that in the future, the data that we're all creating on an ongoing basis, that that's got to only improve or increase in the future, and that's the kind of company that is going to be, I think, creating a lot of that data. So those are some of the companies I'm following in asymmetric investing. So if you're interested, I got a YouTube channel, but then also the newsletter is asymmetric-investing.com, and there's a free side there. But that's where I'm putting all my research, and then I do deep dives on stocks that I call spotlights. And then once I do a spotlight on an article, it's kind of like initiating coverage, if you will. That goes into my asymmetric universe, and then I buy stocks once a month. And my idea there is to show people how you can build wealth, how you can beat the market by just buying these asymmetric investments on an ongoing basis. Not all of them are going to be winners, but those winners are going to just drown out the losers, because that's the way that the market works. The Nvidias of the world just drown out the companies that end up going bankrupt. So trying to find those 10x stocks over the next 10 years, companies like HIMS and HERS, what I'm going to be following. So yeah, if you want more from me, check that out.
All right. Yeah. And the link will be in the show notes there. As a disclosure for all the listeners, we are not financial advisors as well as doctors. And anything we say on the show is not formal advice or recommendation. Ryan, I, or any podcast guests may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for listening to this episode, and we'll see you next time.
I finally had a light bulb moment about a stock we've all heard about, growing at 18% a year and a 15 PE. I shared this insight in a special deep dive report to subscribers of my research service, Value Spotlight. The report is called A Generational Moment, Reigniting Human Connections Through a Tangible Network of Intangible Assets. Chit Chat listeners can get a discount to my research at stockwriteup.com. That's stock, WRITEUP.com.